Hello, hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Friday. It is May 5th. Parade day in Russia. Let's see some drones. There's a prize if somebody flies a drone over the Red Square. Okay, I don't know why I'm saying that. Let's see what the market is doing now. Now the market is coming from a big break that has take that has completed the trade to the downside. There was a look above, and failure, and fail. And the destination of this trade was the opposite side of the range. In this case, this one, this has been reached and has left as a weak low down here. There's no excess in this low. This week, I mean, this low was weak. It's even weaker now. It happens to be also the breakout of the support of the monthly, weekly, and daily time frames. And overnight inventory is 100% low here. 100% low. We have a gap to the upside. We have a spike also to the upside. First, we have a break. Oh my God! Look at where that break is. Will this after non-farm payrolls? It's very close to halfback, overnight halfback. Very close. It was bought. There was a lot of buying here going on, but there's a gap here. Gaps are signs of change. But yesterday, I was talking to a friend yesterday, and we were talking about the potential of a sequential trade here. Feels the market taking this high and then coming back and take this one out, which will be the next movement. This movement to the upside in the market opens up here will squeeze or remove these shorts, and the longs will remain at a very weak level to be long. Coming from this low here that was bought from half back and then was bought again a couple more times, which is basically also again uh, the low of this day. There was a lot of short inventory here. Market was getting too short here. Um, all right. Let me open my. I'm going to open my Thinkorswim charts to take a look at the bigger time frames. I'm sorry, sorry. I didn't realize I was on mute here. Gosh, I was talking to nobody here. My bad. I'm so sorry. God, this is crazy. Okay, um, let's go back. This is going to be fast. The monthly, we have a 30-month range. The market has gone nowhere. The longer the market trades in range, the more dynamic the breakout of the range is. It could be to the upside, it could be to the downside. Nobody knows. The high of this range, we have a 2-week, 2-month range that has gave us already, has left a, a three high or a triple high here, which is a sign of weakness in the upper side. And the trade here was once the market took this high out and failed, the destination was the opposite side of the range. Where now the market has reached the opposite side. Uh, well, I am very interested in seeing if this has continuation to the downside or if this breakout is rejected and puts the opposite side as destination trade. This range is very narrow. Narrow ranges are easily toppled. All right, the weekly. The weekly we have a four-week range. We can see the breakout to the upside, failure, destination trade, the opposite side of the range. That opposite side has been reached. Now, what's the next trade here? We can have downside continuation or rejection again. Once was rejected, and what's the next? The opposite side, right? If this breakout is rejected, what could be the trade here if the market re-enters this range? Could be the opposite side as well. In the weekly, we have four highs: one, two, three, four, plus this one, six, plus this one as well, plus the gap. Look, very weak high. But if you remember last week or the beginning of the week, there was absolutely no bias here. There was zero bias here. The buying just dies here. There's nothing here. There was nothing here. But trades were used, got used to buy the market, and they were just killed here. That trade has been completed. Downside continuation has this low as a next destination, and the ultimate destination 38.50. It seems far, but this distance actually is not that much. It could be if the market could reach this low very easily, like it did when the market print this kind of bars. All right, it doesn't mean it's going to do that. But when I look at these different time frames, what I do is I acknowledge that there are different different traders here that are doing their job at the same time as I am doing. I am very short time frame trader. There are daily time frame traders. There are weekly time frame traders. There are monthly time frame traders. And these ones, the bigger the time frame, the bigger the staying power they have. Right? Because if you have more money, if you want to do those kind of trades, the daily. I want to zoom in a little bit here. The daily, we can see the range here. There's a range in here that has been taken. Right? Breakout, fail, and which targets the opposite side of the range. And now this day make another range, right? It increases the area of the range, the span of the range. This low has been taken. This low has been taken. And what may happen here is the same thing that happened up here. We have a lookout, look below, and fail, and the destination is the opposite side of the range. The market has get a little bit emotional. It's getting emotional because we have one gap here and another gap here. And the more the gaps, the more the emotions, right? One gap could is a sign of change. Two, three, back to back gaps are a market getting emotional. Emotions are running high. This market traders are getting too emotional here. And this low, though, This low here is, can you see where it was bought? This is the 50 moving hours. It was right there. This, when the market does this kind of buys, you know, um, remember that I was talking about the different time frame traders that are in this market. Bigger time frame trading money doesn't do this kind of stuff. They don't buy at this. If they want to go long, they won't buy here. This is typical. This is a characteristic of short time frame traders. Okay, so that's why I say this low is weak and has and has low odds of being a lasting one. The market may come back to check this one today or the upcoming days. Also, it's not just a 50, but also matches this one, which at the time was also a weak level here, a weak level here. Now let's take a look. Let's zoom in a little bit more here. Okay, we got market profile. Yesterday we have a narrow, not narrow, a wide, a wide POC from yesterday. And we were talking with a friend yesterday about the possibility that having a sequential trade here. The market was getting too short here, was getting too short. Inventory was getting too short. Some of those inventory was removed here, but it then again came back was being sold exactly from this level, from hard back, from I hard back, and not just that, they come back again on L and M, which give us a three super weak high here, with high also being taken. The overnight did take this one. The breakout, after news release, this break couldn't get even to this level. It got close to overnight hard back, very mechanical buying here. But this, if the market opens here, what will happen with all the shorts from this, you know, this side or this time of yesterday's trade, yesterday's session, will be well underwater. And what happened with somebody is underwater. If you are a short and you got caught short, what happens? You wanna what you wanna do is you just wanna leave, right? You wanna get out of the market. There's a lot of margin calls that can happen here because there's this kind of a significant distance here that can happen here. You got a good gap here to the upside, and these shorts can be squeezed here. But and this is the fuel. This could be the fuel that market needs to do a rally here. How far the market can be taken? That's the question. From this day, I don't know what happened here. FMC, I believe. Was it FMC? Yes, it was FMC. There was a lot of selling. It gave us a spike to the downside. The market has re-entered right now, as 9:15. The market has re-entered the spike. And what I got from this day that it was sold like 7 or 8 times from this level here, selling from the same level multiple times. Uh, it is not a sign of a weak market. That I can say. At least that's my opinion from this day here. That's my opinion from this day here. Uh, there could be something there. There's a lot of stuff. If the market sells one, two, three, four, five, 6 times from this level here, just get what's it going to be above here. Okay? There's going to be a lot of stops here in this area here. And when the market gets close, the closer it gets, the higher the risk, or the high the the higher the odds that this market to having a spike here. Just to take this stop. When something like that happens, usually there's a spike that ends that sign as the culmination of of the trade or when these stops are taken. Many traders misunderstand that. And that's an exit actually. What traders do most of the times, they use that to enter, right? Professional traders use that to exit, right? Because by the time the market gets there, you are long. You have been long from where? You have been long maybe from the base of this spike. I don't see that that no. Um, Maybe from this area from yesterday. That could be leaving if the market give us some kind of spike somewhere up here or maybe up here, but any kind of spike. Uh, Inventory is very short. We have a gap to the downside yesterday, and now that gap has been closed. Will be closed if the market opens here. We have a gap to the upside. The same thing that we had this day to the downside. We have a big gap to the downside, market gap, and opened here. We have a spike to the downside, and now we are having a gap to the upside, an upside gap, and also a spike to the upside. The spike would see starts here, right? Starts here, and not just that. As of 9:20, the market is inside the spike. You know, it's inside the spike in the upper side of the spike, which is a sign that prices have not got too high or high enough to cut the buying. The buying is still coming. Prices are not too high to try to buy. To try to buy here. Um, the odds would be that the next thing that I would monitor here is how value develops. If value starts to building up higher here, which for which the market will need to remain up here and trade sideways, that's value moving higher, or value starts moving lower. What I do is I trade value. Value moves slower than price. For price, you can see market was here just like 30 minutes ago and now it's up here. But where's value? Even for the overnight, I don't trade the overnight. The overnight it's too low volume in the overnight. But you can see value, right? Value in the overnight is this square here, and it hasn't moved, right, actually, right? What I don't trade the overnight is just have too much. The volume is just too low, you know. Kind of like in 20 something periods, 24 periods, something like that. We have 300K volume, and the market does that kind of volume maybe in one or two periods during the regular session. What what I what I will carry on, something that I will carry on is this level down here. The way how this market is going to the upside now, it's kind of like a steep rally. It could have been in the opposite direction. Okay, that I had from yesterday. And why? Because we got a triple high here and a triple low here, and not just a triple low here, but a weak level down here, coming very close from the 15 moving average and also from this low back from March, back from the last day of March. Now, the upper side, we have talked about the volume that we have in this area around the 4130. A lot of activity, a lot of big blocks in this level here, which happens to be half back. And then and March higher. This March high has been traded heavily. There's a lot of trade that is going on in, around the around March high. It has been bought multiple times, sold multiple times from that level as well. This high is a mechanical high coming from fallback from this day coming from POC, and this day pretty much from very close to February high as well, and could be the 4200 level as too. The nuance here in the upper side is that there's absolutely no volume here, no volume here, no volume here. The market just dries. It just dried when it went high. All of this inventory has been removed now. There's nothing here on the long side from this, the whole month, the whole month of April has been thrown out of the window, and this is no, I mean, there is excess. The market gives excess here. We have excess, 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 but I don't see that, kind of like the market breaks more like because there's lack of buyers than that that there is that there are sellers coming in. There was a change though. There was a change yesterday and this day. The thing that I question from yesterday is the amount of volume that we have here. When you have huge amount of volume at the low of the range, this could be laggards. The laggards traders that are entering the market, finally entering the market when they see the market has changed, right? But this could be the end of the trade to the downside. But there's a lot of volume here, and for what we saw here, but we can see here, there's a lot of shorts and a lot of longs as well. Very concentrated in yesterday. Um, I try to remain. I will try to remain. I have placed a trade. I already placed a trade here, and I take a loss on that. I was aiming. When the market has this spike, the market was up here, and I didn't like the market came back in here. I went short somewhere when the market closed the gap. My out was going to be when if the market doesn't have downside extension here, doesn't attack or travels towards this POC, white POC, and having the potential destination, this range low here, high here, low here. This was, a potential or the ultimate destination of this trade. No, but the market didn't have any continuation. It not just came back to take yesterday's high, but also uh, took the 4100. When that happened, I just closed my trade for a loss here because I consider the potential of the market uh, being explored, having explored above yesterday's high, and I rejected the gap and opening inside yesterday's range. That didn't happen. Now, the original conditions remain. What we have is we have a spike, we have a gap, and we have a lot of short inventory here. What we can have here is some kind of short covering. Uh, but be careful. Be careful to misunderstand short covering with something more powerful, that is short covering plus new buying. How I can see that, or how I qualify or differentiate one from the other, I can use volume to that. The ES is an index, and what I use is volume from the New York Stock Exchange, the overall market here. Hey Tremel, I'm um how are you, man? I got this. I trade you trade open. You mean yeah, I don't call trades. Well, I do not call trades. I do not trade market profiles. What my trades I are developed trades. My trades usually take long longer periods of times to develop. And what I try to do, for example, what I was trying, the trade I say I did in the morning, it was, it was, it has as an objective this low here. And I trade the options. I don't trade stress futures. I think the risk is too high for me to do futures, uh, especially when volatility increases. And options give me some liberty. For example, when I did this trade here, you know, I can be short here, for example, right? I short here, the market comes back here, and when the market came back against me and took this high and took this high as well, if I would have traded futures, I may have maybe like 4 or 5 points negative, all right? And doesn't happen. I have more liberty, um, more time. It allows me to give me more time to the market to react, and I still be short in control my risk there. I can be 1 or maybe 2 points underwater when or even if the market have at 5, 10 points um, has traveled 5, 10 points against me, right? That's that's what options gives me, and I don't trade options in the same way like most people do. Like I don't know about betas, thetas, alphas, all those things. I'm not interested as well in those kind of things. What I see is, as I say, I try to see the risk, what the risk may be in markets. Okay, market's open now, and my charts have frozen. God damn! What the heck? All right, all right, all right. This is the low of the upper lower distribution from Wednesday. This is the high of the upper distribution on Wednesday. We have a gap finally. Oh boy, this is. I mean, this is not good, but it's not that bad. Okay, volume is lower than yesterday, but it's higher than the rest of the week. Huh. That high is no good. That's not a good high coming from the high from overnight high, coming from the low of this distribution as well. Very mechanical high, very mechanical place to be a seller there. High risk of being short here. Um, I usually don't trade the open, and the reason why I don't trade the open because the risk is very high. The risk to trade the open is very high. Just make, I mean, if just make an analysis of your. If you have been traded the open, just take a look at your trades, right? How many times you were successful, how many times you were not, and by looking at those numbers, you can see, right, if it's worth to trade the open. I hate that this. I hate this. This. Why? Why I'm seeing this? Okay, fine. Yeah, this is bad. Okay. All right, we have some selling there. This high has been taken. This one is no gone. This one is gone. This reference, this has been corrected. Why, this is a big short squeeze here. Overnight inventory is 100% short. The market didn't care about the overnight inventory, didn't make an attempt to close, to do any counteraction to the overnight inventory. It rather is squeezing the shorts here. Squeezing the shorts for this area we were talking about. How long that can last is the question. Can the market take the base in the spike? If the market trades, if the full amount of trade is inside the spike, I mean, there will be no change in this market. That's too early to say. We have a gap, value is higher, obviously. Overnight inventory has to be 100% long to have a gap. Now, what do we have here, right? What we have here is nothing. The market has nothing here. There's nothing here. If this is a strong market, it should have no problems to travel all this distance all the way up to here and take this level out. If you got a long, that's the way how we monitor your trade. I believe the first part of the trade has been completed. The first part of the trade was take these highs out. Now, from yesterday, let's say I saw the potential of a sequential trade. The first part of the trade, I mean, the sequential trades has two parts. First, taking this high, and the trade itself is the next one, because there is no way to know which one was going to be taken first. In this case, this was the one. Now, remember that's just a potential, right? That's just odds that I'm playing here. Market has a gap which changes things, and now the market closes the gap with another gap. And now, how much emotions, what else do I need to know that this is an emotional market? Very emotional market here. Very emotional market here. This will be now gap closed. Why gap closed? Because this is the low, the higher the gap now, and this is the lower the gap. Notice how, oh god damn, notice how market has just died there. You know, the fact that I see something, it doesn't mean that I am going to go short at this moment in time. That's a reference that I carry for when the market gives me an opportunity. The next thing important here is Wednesday. We have for Wednesday we have what is that? What is this? Come on, what the heck is on Wednesday? Inflation rate, I believe. Next week, Wednesday we have inflation rate. Yeah, inflation rate, core inflation. Thursday we have PPI. Friday, GDP. I don't know yet what kind of earnings we may have next week. Or if we have earnings. If I was long here, well, this would have been my out here. The market just is dying. It doesn't have continuation here. It took this higher range out, and it's not having continuation. It's getting risky now. I either hedge or start to trim my positions here. And the reason why I say that is because there is nothing here. Okay, there's nothing here. What about volume? We are 7 minutes to 2, 3. Okay, it seems like we can have some good volume here as well. Okay, there's a lot of shorts here in this level, in this one, on the buy side pike. As I said, the market was sold like 7 times within this level. If if I see a burst to the upside, like movements like boom, 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 that that's short covering. That's how markets short covers shorts. Right now, for example, we got stops here, right? There's a lot of stops here, but it's just hovering around this level. We got stops here, a bunch of stops here, high volume here. Oh, something that I did not see, I did not show. Oh God, look at what's happening with gold here. Gold's having a huge break here. I think this is a reaction to this very mechanical trading as well. This is targeting again the 2000. It has this low, these multiple lows here. There's a divergence with 10 and the 30. Crude oil has closed the gap. Was getting too emotional as well. Alright. Now, the same thing that happened with traders that failed to adjust when the market took or when the market started breaking like 3 4 days ago, when just the buying died up there about 4200. Those same traders have started to sell yesterday, and now they may be failing to adjust now because the market has changed here. There's a change here. Overnight inventory is 100% short, and market just didn't care about that. Okay, this high has been taken as well. There was a lot of shorts here from this overnight. That has that is gone. Seems like we're going to have really low volume. It seems. Oh, and also it's Friday. It's Friday. I think we may have volume like that. Let's see. The destination of this trade could be this high. If the market gives us a spike here, that's an out. Dun, 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 dun. Yeah, I don't. This is a class. This is a typical. No, this is a guideline trade here. Inventory is 100% short. We have shorts from yesterday. No, short inventory. I mean, not short, but short inventory from yesterday. Overnight inventory 100% long. We have a gap. You have a spike. Market opening inside spike. Failing to do a counter action. Didn't care about the counter action. No? Remember this level here, this weak level here has a lot of weak inventory here and a gap here. This would be a gap high now. This would be gap high. The market has seen this level here. Now be aware of the diffusion model. What is the diffusion model? The diffusion model is a way to allocate or see where how a trade, in this case, how a business is distributed, right? You have innovators, early adopters, early majority, late majority, and laggards. This part here could be, I don't see here. It could be here, could be down here, or down here. Innovators, early adopters. Most of the money is made in early and late majority, which I believe we could be getting into this area here. Could be indicating in this area. If the market takes this with a spike and comes to much high, I guess this would be we will be entering in this stage of the trade. Okay, market now. How do I monitor this thing now? How do I monitor this thing? Okay, market. One thing, market re-entered the range of this day. Re-entering this range targets this high. Again, let's do this again. Re-entering the range, market re-enters this range, re-enters the range, targets this high here. Now inside this, a closer look, we have this distribution here, this distribution here. We have two distributions, right? One here and another one here. Coming inside this one, market open just below. Coming inside this one targets this one, this upside. It did it really fast, really quick. Now, this part of the trade comes to an end when it gets to this level here. Now this is another distribution. We have one trade, one big one, another one re-enters this distribution, or market re-enters these distributions here. The upper distribution, which is the biggest one, targets the upper side. Okay. If it fails, that's the question. If it fails, that is the question here as well. Okay. This could be. Let's see. I don't want to speak ahead. And this could be a good day to the upside if the market starts taking. There's a lot of volume here as well. Especially, I suspect there's going to be a lot of fight here in this area. Here, for what I remember happened in this day. The way how it did, the way how it happened though, was very mechanical. Very mechanical. And let's see. This is what misleads a lot of traders here is that we have this kind of openings, but traders don't pay attention to the context, to what is to what the surrounding circumstances are. We are coming from a big break, right? Big break, inventory is super short, inventory is very short, the potential for short covering is is there, is high as well. And they have a good day. Traders have a good day today. Traders may have a good day today. What might happen is another day like this may happen tomorrow, may happen Monday, for example. And the market opens, we have long inventory from the overnight, the market opens and boom, rally to the upside. And because they did that, the last thing they did that worked, I mean, which was in this case, you know, market open and went to the upside. Now the market opens again, it's going to the upside, I'm going to buy. But the surrounding circumstances are not the same, right? They don't put price in context and they just do the same thing that did before because just because it worked. Now I am going to do it again. They don't put context, they don't add context to that. And what they can make in one day, what they made one day, they just give away the next day and lose a bit, a little bit more than they made. Okay, can see the market there. The first time could be a selling. Now, value is higher. Okay, value is higher. In a market that was going to the upside, inside a trading range, we have a 25 days range now. And how you go, how you prepare yourself to go short from yesterday, from a day in a day like yesterday, right? Market open and boom, you just short the market. The market give you a sign that it didn't care about the overnight short inventory. Now the market is opening to the upside now and didn't care about the same thing that happened yesterday. Didn't care about the overnight inventory. The same thing happened today. It wasn't that clear as it was yesterday. But it just how you adjust, how you make that adjustment. I say I don't, but that's only one trade, and that trade is short. It's very fast. Um, monitor for continuation is the other step, the other goal that I want to achieve in the journey of learning to trade. What is the market, having upside continuation? It is how the trade is being conducted. Does it have conviction? Does it give away much? It is being bought mechanically. What about the short inventory, long inventory? What about the condition of the overall inventory, the market overall inventory, how it is? Are we in a range? Are we in trade? Are we in a breakout? This is not a breakout, for example. We are far from a breakout. We have a gap, that's true. Volume is drying. You can see the volume is drying here. Compared today to yesterday, for example, can we get up to here? That is a question. We are having some accumulation there, some congestion at the center of this range. We have some congestion at the center and at the high. There's a lot of volume being accumulated here. Remember, there was a lot here in this area, a lot of trading, and now there's a lot here, right there. We have 5 minutes before the next period opens. Any questions, comments? Please let me know. All of these single prints have been taken. All these single prints have been taken. 5 more minutes. Is the market going to come back to halfback? No. This is curious here. This is rare. This is a nuance here. Notice how we have kind of like two profiles here. I mean, two histograms here. It's very clear here. Taper here, and another taper happens here at this area. It just dries here. You know, it don't have upside continuation here, but it just dried here. It's like the like this histogram is divided in two here. It didn't get close, even get close to halfback here. Everything's positive. Everything is green. All the screens are showing green. Gaps are a sign of change. Gaps are a form of axis as well, right? And this is how we have axis, how we have axis here. Nice axis in this day, but no axis relative to this day. For some, just can you see how close are one from each other. Same thing here. What I see is a very prominent overnight POC here. I'm going to leave it there, like non-revisited. Kind of like white POC here as well. The same white as this one too, though. This one was more extended. This is not. This is more balanced here. There's a weak low here. But I'm not saying the market is going to come back here today, but this is an information that I want to carry. Okay, if the market closes above this level, this would be a breakout failure. Look below and fail in the weekly. And the destination trade, the ultimate destination trade is this upside here. This one up here. Again, this high volume here in one tick. There's a lot of volume that's happening lately. Now, this is the second time in a week that I see high volume in my single tick chart. I want to see this, the market can take this low here, this thin area here. Keeping this one keeps the market to the upside. Oh, the market is buying, making a stand there. Okay, now we are above this high volume node. I want to see the market can enter this range here. If you had a long, if I had a long, for example, at the opening, what I want to do is monitor for continuation. What often happens is we refuse. We don't want to close. The market's going the direction when we don't see problems. When problems start to happen, that high is not good. For example, that high has low also remain there. Again, that high has been repaired. Notice the volume here. Notice even lower than the one I expected. Okay, I want the market to re-enter this range. If this market was sold 7, 8 times this day, now it has been sold 8 to 9 times. So there's a lot of stuff here. This is an area with high volume here. Market crosses or trades below this level. What is that level? Or 25? Where's 25? Oh, here it is. Now there could be some liquidation here. The market takes this low here. But remember, the day now is to the upside. We got value higher, we have a gap, we have a spike, all signs, all positive signs. Oh, volatility! Look at that. It's less than 18 now, 17.9. Huh? Unbelievable. Selling from the low of the upper distribution from Wednesday. That's not a good level. Also, that's not a good. Sorry. I think that level can be taken. Now, the question will be if the level is taken. Now, I want to see if there is upside continuation or there is a rejection of that level. Inventory is very short, so there's potential here also. No? There was a crazy day. This is FOMC. Was a crazy day. The base of the spike has been taken. Now selling from half back. The next level from where the market could sell is for half back here and FOMC. I mean FOMC, POC here. But there's nothing in this day. There's single pins, all single pins to the downside. There was a lot of back and forth on FOMC. Hmm. Selling from value area low. Can you see where that high is? Right value area low. No, market has re-entered the value area. And there's a lot of volume here in this area here as well. And the way how he's doing, man, this doesn't have a spike yet. Now we're having something. Like the market is not convinced. Doesn't like the market doesn't believe in itself. Halfbacks are obvious reference for traders. Traders can see where these halfbacks are. There could be some selling from here. I'm not surprised where that high is, right where this really high volume is. That mark. There's another nodule. There's another high volume node there at that high. Sorry about that. Selling from halfback. Market selling from halfback. Mechanical selling. It doesn't mean it's not going to work, right? I'm not saying that. I'm not saying that. Market is inside this distribution. Right? Market monitor for continuation. I don't want to see the market coming outside of this one. It happens to be held back as well. But convenient. What a convenience, right? What a convenient law. Okay, it is 10:15. Unless you have any questions, I guess I'm going to call it a day. I wish you guys a good rest of the day. Stay safe out there and have a very productive day. All right. See you guys. Stay safe.